Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 30th of June. Let's dive into the week's top market news. European markets rally amid geopolitical and economic stimulus hopes. European equities experienced an uptick last week, with the Pan-European Stocks Europe 600 index closing 1.32% higher in local currency terms. This positive movement was largely attributed to a sustained ceasefire between Israel and Iran and an easing of concerns regarding a prolonged trade conflict. Furthermore, the prospect of economic stimulus from Germany and increased military spending by NATO contributed to the buoyancy of stocks. Germany's DAX saw a significant climb of 2.92%. France's CAC 40 index gained 1.34%, and Italy's FTSE MIB increased by 1.30%. The UK's FTSE 100 index also registered a gain of 0.28%. Despite the market rally, June surveys of purchasing managers indicated continued stagnation in the Eurozone economy. The HCOB Eurozone Composite PMI remained unchanged from May at 50.2, reflecting a muted pace of growth, although services activities showed expansion after a slight contraction in the preceding month. German output rebounded from its 5-month low in May, suggesting modest growth. Conversely, France experienced a deepening slump, with its composite PMI remaining in contractionary territory for the 10th consecutive month. Inflation figures in France and Spain surpassed expectations in June. France's European Union harmonized inflation rate accelerated to an annual 0.8% from 0.6% in May, primarily driven by higher services costs, exceeding analysts' forecasts of 0.7%. In Spain, a rise in fuel prices pushed the headline inflation rate to 2.2%, reversing a 3-month slowdown that had brought it to a 7-month low of 2% in May, contrary to analysts' expectations for it to remain unchanged. Broader business sentiment across the Eurozone weakened in June, primarily due to decreased confidence in the industrial, retail, and consumer sectors. The Economic Sentiment Indicator declined to 94 in June from 94.8 in May. A separate measure of consumer confidence also saw a slight drop of 0.2 points to -15.3. While consumers expressed less pessimism about the overall economic situation, they were also less inclined to make significant purchases. In Germany, however, the IFO Research Institute reported that business confidence improved for the 6th consecutive month, reaching its highest level in a year, fueled by optimism for increased government spending. Regarding monetary policy in the UK, Bank of England Governor Andrew Bailey indicated to a parliamentary committee that domestic factors were more influential than international ones. He observed a softening in the labour market and an opening up of slack in the economy. Bailey reiterated his view that the path of rates is still downward, but it is going to be very gradual and very careful. Now our insight into alternative markets. T-Hub Capital. H2 2025 investment outlook on private equity and alternatives. For the second half of 2025, we see private equity and alternative assets as crucial for value creation amidst shifting global growth, trade policies, and geopolitical uncertainties. Our strategy prioritizes strategic capital deployment to capitalize on high-growth opportunities. In a low-interest rate environment, cash holdings present strong opportunities for alternative asset investment, with pay offering compelling risk/reward profiles. We will continue to focus on private equity, particularly in STEM-driven sectors like AI, biotechnology, and sustainable mobility, anticipating strong returns from companies nearing IPOs or strategic exits. While government bonds offer stability, pay investments in technology, healthcare, and infrastructure provide higher growth potential, allowing us to balance risk and return. We favor pay-backed companies in cyclical sectors and quality stocks within equities, especially those leveraging private equity expertise for enhanced valuation before potential H2 2025 IPOs. Infrastructure remains a core pay opportunity, with accelerating global spending in renewables, smart transportation, and digital infrastructure. Nature-positive investments are a strategic alternative, targeting ESG-aligned companies in areas like water technology and biodiversity. Declining interest rates make real estate an attractive income driver for pay, particularly in low-yielding European markets. Hedge funds, employing various strategies, complement our pay portfolio, offering flexibility in volatile markets, further expanded by private debt. Finally, we see value in emerging market currencies with strong fundamentals for cross-border pay investments, and gold as a strategic portfolio hedge against geopolitical risks. In essence, our H2 2025 investment convictions underscore the central role of private equity and alternative assets in navigating current market dynamics, focusing on STEM-driven innovation for sustained growth.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.